No stop loss trading? Is it possible? Let's see if we can find out. But before we do, subscribe to the channel, like it, and let's go. So here's an idea. Is it possible to trade without the stop loss? This is one of the interesting questions that people ask me. And I'm a systematic trader, so I actually know the answer to it because I can use one specific type of a system for just that answer. Let me see. Here's why. Stop loss by itself is not actually bad at all. It is actually a good idea to have a stop loss, but there is a lot of risk associated with stop loss when you use it in a specific way. As an example, do you know where to place your stop loss? Some people are not sure. They do it based on the dollar amount that they want to lose, but they don't really choose the right location. Or do you even know when to get out? Because one thing is to get in, but the other one is to get out. And do you know how to protect your profits? So, how about we are looking at it in a different way? Let's go in a new term and let's call it a stop profit trading instead of stop loss trading. Okay, so stop profit. So it's basically you have a profit, but you are not really hitting the heights. So what it will do? It will protect your money, same way as the stop loss does, but it will lock in your profits. So let me show you what I mean. So here's the two sides: stop loss trading and stop profit trading. Stop loss, it focuses on losses because some people, as I said, do a little bit too much of loss-centric trading, where they look at how much money do they want to lose and disregarding the actual market structure, disregarding the instrument structure, when it support lines, resistance lines, because they may not even know what it is. Okay, so they're focusing too much on the losses. Here, you can be on the stop profit side, you can be focused on gains. So meaning that you will put a specific trailing stop, to be honest, and you trail behind, avoiding all kinds of market noise. So that is why it's not a static point, it's adaptive exit. It locks in your profits instead of getting you out too early, and it's not rigid. Okay, it's more flexible and active. Now, how can you win? Well, it's very simple. If you see that stock rising and you have your trailing stop rising behind it, it will lock in the profits right there. So you will let your profits run. Exactly the methodology that's been used for ages with the trading. Okay, so we want to make sure that we let our profits run. Now, here's an actual example. This is S&P 500 index. I just want to show you. Well, it's actually, yeah, it's a SPY, which is the ETF for S&P 500 index. And you can see this red line. This red line is the S&P 500's current 200-day moving average. It's a very simple indicator. A lot of money managers look at it. And what you can do, you can just lock in the profit by following that rising, as an example, moving average, and then take the profit when your market breaks that below it. As an example right here, right probably in March of 2025. And this way you prevent this whole fiasco going down. So it protects your money and it lets you to actually reap the benefit of the market noise. You can see that it went back in somewhere in May of 2025 and it's still rising, right? So no matter what the market does, we can still be sitting in the market and following the price. That's one of the examples of trailing stop. The caveat to this whole thing, though, is you're never gonna lock in the maximum profits. Okay, it's the downside of it, but because of the whole nature of how it trails behind, it lets you to lock in most of the profits, but just not all of it. Okay, so that's the only downside to it. But that's because you want to avoid the market noise, and it's impossible to basically stay in the market and at the same time avoid the market noise and get out right at the very top. So that's the main reason why it always trails behind and not trails ahead. Now, any danger to this particular mechanism? Yes, there is this called whipsaw effect, where it can whipsaw you with continuous stopping. So let's say you didn't give enough space for your trailing stop. So you'll be stopped out, and then you will get in again, and you'll be stopped out again, get in again, stopped out again too soon. As you can see, this kind of like a chart represents this mass of gazillion types of stops out. So when that happens, you are going to lose a lot more money than make. So that is why the whipsaw effect is very true, and it exists as a part of this particular methodology. Now, what can you do for trailing? What kind of things you use for trailing? Well, percentage trailing is one of the most commonly used things. It's called trend following, to be honest, and it's called long-term trend following, to be more specific. So this is the type of the trend following that I'm using myself, and you can use indicators, or you can be even fancy and use volatility values. Well, as an example, if you can measure volatility of the current market, you can get out when, let's say, volatility dies down. So like back in May, volatility was high, and as it rises, you get in, and then you will get out when the volatility dies down. So that way, it's called momentum trading, which is a different type of trading, but still, you can basically trail by momentum as well. So that's just a sample of things you can trail behind. There are all kinds of indicators, by the way. The simple moving average that I mentioned before, there's Dungeon channel, there's Bollinger channel, there is a Keltner channel, there's a parabolic trail. There's all kinds of indicators out there which let you do the same thing with just a different way of approaching it. So beware, there is a lot. Now here's an example, actual example of the system that I personally trade as a part of my suite of systems. I have 67 of them. So not gonna lie, I'm not gonna use just one of these things. I have a lot more in my total toolbox of systems. But that's one of the systems that I trade. To be specific, it's called V-shaped recovery system on a NASDAQ 100 stock set. It trades 10 the most popular stocks of the day, which were the popular in the last 60 days. And then it will choose them and it will trade them. As you can see, it beats the S&P 500 by a wide margin and makes returns a lot more, like 3 times more than the S&P 500 does. Average return for S&P 500 is 8 point something percent, which is compounded annual growth rate. But you can see that by the definition, this particular type of system has all the features of the trend following. It wins half of the time, like 49% of the time, but every time it wins a lot. What I mean by that is this win-loss ratio, sometimes they call it the risk-to-reward ratio, it's the same thing in here. So win-loss ratio lets me see that for every dollar that I risk, I'm going to win $5.14 on average, even though I only win 41% of the time. So every time I win a lot, even though I just don't win that often. So sometimes I have a streak of losses, but that's the point of this whole trend following system. And now, the bottom line of this, you need to have, at least in this particular example, the trailing particular stop, or stop profit, as I called it. If you use this approach, make sure to lock in your profits by knowing your exits. A lot of investors out there, they just shoot from the hip, like in the Western, so they don't know exactly what's going to happen. So make sure that you do know how to lock in your profits. And that's the main thing that I wanted to say. But can you trade without a stop loss? Absolutely, because it's not really truly the static stop loss that everyone talks about. Otherwise, if you have any questions, concerns, looking for something interesting as well, watch our channel. There's a lot of things on our channel, but also check out our website, tradingsystems.com, and write to info@tradingsystems.com, and I will reply to you with any questions. Also, leave a comment, obviously, if you have more questions and want to get it through the YouTube. Otherwise, we also have 4 books on Amazon, which are accessible, and you can buy any of this and learn a lot more about systematic trading. And this time, I'll leave you to either find more information or see you next time. Okay, bye.